Good Monday morning, Market Chameleons, and everyone joining for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Dimitri Pargamonic. How you doing, D?
Good morning, Will. How are you?
Good. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind Will and I and Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor. Call your broker. That's what they're there for. And there's the disclaimer.
Excellent.
Let me share my screen. While I'm doing that, if you're joining us for the first time, Will and I, we do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, the data, the analytics. If you have a question, type it into that live chat on YouTube. Will's watching it. He'll read them back to me. And to give you guys a couple minutes to put in those questions, we'll start out looking at the pre-market report, see if we could get insights what's going on in a pre-market hours, and then we'll move on to the questions. So pre-market report, these are stocks trading in pre-market hours. Up here, we have a calendar view. So it does let you go back in history to a specific date if you want to see what happened in a pre-market hours that date. So far, today, December 4th, this is what's going on. We got 434 stocks trading higher in the pre-market hours, 485 stocks lower. As far as volume goes, we got 415 million shares trading on up volume versus 47.5 million on down volume. If we convert that volume to dollar value, we have $1.2 billion worth of stock trading higher versus $1.9 billion worth of stock trading lower. And I think that's just indicating there's a mixed bag. It doesn't look overwhelmingly bullish or bearish in a pre-market. Let's move down and see if we could get some different perspectives on what's going on in a pre-market hours. So we're going to take a look at this list here. We have our most active stocks in pre-market hours, our biggest percentage gainers, biggest percentage decliners. We have 68 stocks on our percentage gainers list, 80 that made our biggest percentage decliners list. So that's slightly bearish from that perspective. And so what are these lists? These are stocks that have to meet certain thresholds to make this list. So we do look at the liquidity, the volume, the price changes. There are a bunch of conditions in there that have to make this list because in the pre-market hours, it's less liquid. You could have one share that traded in pre-market hours. So the thing is that if it meets these thresholds, any stock that's listed on a major U.S. exchange could be in ETFs, leverage products. It could be a small cap stock. So pretty much any security that is trading in pre-market hours and meets our thresholds could make this list. And to narrow it down to a smaller group of stocks, we could use the filters above. If you have a watch list, you can filter by your watch list. I'm going to use this one as an example, the ETF, which is a drop-down menu to choose from. You have different ETFs in there. When you select one of these ETFs, the stocks below will get filtered by holdings that are in that ETF. So let's do SPY. These are stocks that are holdings in SPY, which are the S&P 500 constituents. And here we have 3 stocks that made our percentage gainers list, 10 on the decliners. So that indicates slightly bearish sentiment in the pre-market trading. So let me see. We gave it a couple minutes, Will. I think if you do have questions, I'll go to the questions now.
Nothing's popped up yet, D.
Okay. So I think we left off on Friday. We were looking at some tools up here. We went to this price action analysis tool. And the example I showed, I think it was an SPY, and we did a seasonality. So the idea there was if we wanted to look at historical seasonality between different time periods or calendar periods in SPY, you'd come down here, select this seasonality as one of the choices, pick the dates, so it's defaulted the first date to whatever the date is today. So today is December 4th, tomorrow this will be December 5th, but you can change these dates. And you have the flexibility to pick that calendar period. So let's go to December 31st over here. So if we wanted to look at SPY from December 4th to December 31st, and then we could pick the amount of years we want to see. We could pick just the most recent years, 4 years, 5 years, 6 years, or a much broader period. It's set to 12. When we hit that, then we get stats for the seasonality SPY. So from December 4th to 31st. And then we get a bunch of stats here. The frequency of up moves versus down moves. So here's the chart here. It's kind of showing you going back in history, how often was it up versus down. These here, it's the average move. It's the average of all the moves for the period. This is the median move. So you could see both are positive. Then we could take a look at separating only the positive moves and only the negative moves and taking the average of those. So you could see here 2.5%. If we took the average of all the positive moves, 3.8% of all the negative moves. And this indicates to us where in the periods that the market was up, SPY, the S&P 500, periods that it was up, and the periods it was down, the magnitude of the moves to the upside on average were not, did not exceed the moves to the downside. It was more volatile to the downside, right? So that's what this is saying. We could see it graphically here. These are the red bars to the downside. So we had a couple pretty hard moves to the downside. And keep in mind, this is this period. We're still looking at this period from December 4th to the 31st. The average move and the median move. So the average move could get pulled in one direction when you take an average of numbers. If you have, an outlier or a very extreme number, it could get pulled up or down. So we take a look at the median move to see right in the middle what the move was. So you could see here the median move up 1.53%. So this average was taken down, skewed a little bit lower, possibly because some of these moves to the downside were big. And then we just take the max and min, right? So that's the best move to the upside, the worst move to the downside. So then we get the range of the extremes, the high, low. So those are the top stat numbers. We also show here a graph of the average and median starting from December 4th. If we took all these observations from day to day, how it progressed. So it looks like, maybe over here it starts to take a dip to December 14th, and then kind of starts to climb back up towards the end of the year. Down here, we're talking about that these are the observations one by one. So this tells you the period, December 4th to 31st, 2022, December 4th to December 31st, 2021, and so forth. And these are the returns. Okay. So here we'll just go over it until we get a question. Let's stop me if we do.
All right.
Over here, then we have another table, and this table separates the positive moves from the negative moves. So we could look at them for studying the distribution of returns, analyze them and put them into buckets. So what does this tell us? That out of all the observations, 67% of them were higher, 33% were lower. The average move, 2.55% to the upside. The average move to the downside, 3.8%. The median move to the upside was 1.95%, almost 2%. Median move to the downside, 3.87. These are the absolute moves, which would be the same as this. This is the high move, the low move on the positive, same thing on the negative. This is the standard deviation. So this shows that the standard deviation of the negative moves was higher than the standard deviation of the positive moves, indicating that the down moves were more volatile, right? That downside volatility exceeded upside volatility. Okay. And these are the top 10 negative moves, top 10 positive moves over here. So I wanted to kind of complete it because we did have a question on that SPY. Now, let's say we wanted to compare that to another stock. Say Amazon. We could put Amazon as a comparison stock, hit the get results, and then over here, what we have is side-by-side results of SPY and Amazon. So it looks like Amazon and SPY both had the same number or occurrences to the upside than to the downside. Here, on average, though, Amazon lost a little bit, right? SPY gained a little bit for that same period. The median move up here and up here. This is the average of all the up moves, down moves. So you could compare the extremes and so forth. So that's showing you side by side, how did SPY, the market, do? And for the same period, how did Amazon do? So that's another way to compare two different asset classes, or two different assets, sorry, not asset classes, two different assets. And we could narrow down, let's say, if we wanted to see only, let's say when the returns were down, right? So we could move that, reload those stats. So now this is only showing periods when moves were down to compare how the down moves of one versus the other. Okay. So that's a couple different ways to use that particular tool for seasonality. Let me see. If there are no questions here, maybe I'll just move to a different tool.
Yeah, nothing's popped up, D.
Okay. I'll go to my default SPY. And another tool here that people use, that seasonality and trade intraday, is this intraday returns tool. This is kind of a similar idea. Let me close this so you guys could see it better. And this is looking at the distribution of returns for, the stock that you selected, but looking at periods intraday. Okay, so let's say you're just interested in, something that, how does the stock behave between 1 p.m. and 4 p.m. or 10 a.m. to 4 p.m. So intraday, how does it behave? The absolute moves, the average moves, the median moves. So let's just say today, in SPY, we wanted to see between 11 and 4, right? Let's say the day started. Now we want to see, well, between 11 and 4, how does SPY perform? So calculate that. How did it perform historically? And when we calculate that, that will go back and show us the returns between 11 4 for all these observations that basically that we have. So over here, we see the absolute returns. So this is looking at up or down, right? The absolute returns, all the moves are positive. So if you're looking like at a straddle, 0DT straddle or something like that, what is the percentage move up or down? 0.4. And this, just for convenience, it shows you what is the percentage in dollar terms. If we took, the current dollar value of the stock, that's $2 move up or down. The median move 0.3, so it's $1.55 move up or down, right? So that would, if you're trying to theoretically price a straddle from 11 to 4. So those are the average moves up or down, the median moves. What about, does it tend to move higher or lower, right? What are the tendencies of the market between 11 and 4? So on average, what is the return? So here we see 0.1%, which is like 24 cents. So it tends to move higher, right? On average, the best move to the upside in our observations was 1.7%. The worst one was 2.1%. So now we got the range, historical extreme range, high and low. Then if we separate the average up move versus average down move, average up move 0.4%, which equates to $1.95. Average down move 0.5% equates to $2.07. And this is the percentage of moves up and down. So if you hover over it, 57.5% of the moves from 11 to 4 o'clock were higher, the rest were lower. And then we could visually, these are all the observations down here. If we wanted to narrow this down, let's say we just wanted to look at Monday. All right, so maybe not every day of the week things behave the same. Maybe they behave differently. So let's look at the data just for Monday, see how that looks like. So I'm going to recalculate that, and I'm going to keep it from 11 to 4. So here we see that on average, the move was 0.3%, so a little bit lower, right? I think this was like 0.4. The median move 0.3%. Here's the average move of ups and downs, right? So these are the absolute returns. These are the simple returns. The best move to the upside was 1.2%. Worst was down 1.2%. Average up move 0.3, average down move 0.3. And it did tend to move up more than down from 11 to 4 if we only looked at Monday, day of the week. If we wanted to narrow down that data, let's just say to the last 6 weeks or 8 weeks, just click it here, recalculate and see if it changes. So that's narrowing down the data to the most recent data just to see how that behaved, just narrowing it down to the last 8 weeks of data. So this is, and if you wanted to compare it, let's say, to Amazon, you can do it right from here. So if you put in a symbol here, then it'll show you how these two compared for the same period, right, side by side. So this will take the same period from 11 to 4 in the last 8 weeks, and how these two different stocks behaved, and you could see the relative to each other. So I guess if you don't have any questions, Will, I'd probably just stop it right there. We went over 2 tools.
Yeah, I think there was only there was a question Rob asked. He asked well, actually he's asked 2 now. First I'll ask you, does this automatically calculate for seasonality in the type of market, i.e. the year before presidential election, bear or bull market, etc.?
No, that doesn't like automatically do that, because you could see what you're setting, right? So these are the filters that you're setting. So unfiltered just goes back in time and gets that data, so it doesn't make adjustments for, like, things like elections or anything like that.
And lastly, Rob asked, is the seasonality, are all those features premium? He has a friend who's thinking about trying it out. He just wants to know, is it premium or is it
Yeah, so those tools that I was showing, those are the premium tools. So any type of tools like that would be under the premium.
All right. And we have Laurent has a live question he wants to ask. I'm asking
Okay.
right now, but he thinks it's, I think, longer. So he thinks maybe another day. I'm asking him, maybe Laurent can come on tomorrow, or email us, Laurent, and let us know what day's good for you. And we'll set the whole show up for your question. Because we are, I don't know, within 8 minutes of the opening bell.
Okay.
Awesome job. Great job, D.
All right, everyone. Thank you for joining. Stay safe out there. Have a great trading day, and hope to see you guys tomorrow.